Just a couple of weeks ago, you had told me that when you went to your Wall Street peers to raise money for Georgia, you weren't getting a lot of interest because a Democratic win in Georgia would be bad for Wall Street. The markets are up today. Is there something Wall Street's not understanding about this win?
I think, what's overwhelming all markets is just monetary policy. Chairman Powell has, pushed the pedal to the metal, if you'd say so. If you think about it, since 2010, 75% of all dollars in history have been created. So you think we've 4x the money supply since 2010. And so it's just lots of liquidity pushing up assets. And so people were worried. They were worried that, okay, Democrats are going to win. You're going to get a more aggressive tax structure, higher corporate taxes, higher capital gains taxes, higher top rate personal income tax. That normally would be bad for markets. It's just being overwhelmed by the amount of liquidity on the sidelines.
Well, let's talk about your experience with Georgia here, too, because we have, a really historic win here by Raphael Warnock. We have a lead here with Basak as well. Talk about your experience for a second here. What do you think helped you, given that you were working alongside leaders like Stacey Abrams to help win these seats?
Listen, so, I participated in both a group called One for Democracy and then Win Both Seats. Win Both Seats was a retail effort that went out and raised money for Black-led organizing groups. And the theory of change really is empower people on the ground. They know how to get the vote out. They know how to communicate with their communities. And that tended to work. So it was kind of the Stacey Abrams method on 15, 20 different organizations. We raised about $6 million amongst those two organizations. That was given immediately to those groups on the ground who knew how to use it. And I think the story of 2020 really is that the better spent money in politics isn't necessarily giving to the candidates or giving to the parties, but it's spent giving to the local organizing groups.
Well, let's talk for a second also about giving to organizing groups and also Raphael Warnock's win. We have from Georgia to the White House, people of color really taking positions of power. Do you think there's a risk of Wall Street falling behind on the social change we're seeing in this country, given that there's so little diversity on Wall Street still?
Yeah, listen, it's a very tough question, and it's a very tough problem to solve, right? I think one of the big upsides of this election was, the HBCUs, the historical Black colleges and universities, with Kamala and with Raphael Warnock, both getting in, saying, hey, you don't need to go to Princeton or Harvard to necessarily make it to the top. I think Wall Street needs to start recruiting from some of those places more aggressively. But there's not a big pipeline there, and so it's going to take time. It's going to take years, maybe a generation, because you got to start with young people, train them up. You just can't hire a 40-year-old, African-American to do a job unless he's been trained like the rest of the guys.
Before I ask you about the markets here, too, about 6 months ago or so, you had told me that you would do more at Galaxy. Have you started to?
We have an African-American board member. I made a commitment to you, and we hired a wonderful woman who, is a counsel at Netflix, Rhonda Medina. And so that was a start. We are recruiting in this next class of analysts we have, and we are specifically looking for more diversity.
So, one of the first things you had mentioned is people are reacting to things that are beyond the classic things you would think about if Democrats took more seats in the Senate. So, inflation, that's one of the big expectations. Is that good or bad for stocks?
Right now, everything is good for stocks. That keeps Chairman Powell keeping, the money supply running as fast as it is. The Fed has made a commitment to keep rates at zero and to continue to buy quantitative easing, for 3 years. And so it's creating a bubble. It's creating a bubble in stocks. It's creating a bubble in just about every asset. There is so much liquidity on the sidelines that, lots of people were hoping for a pullback on this. And you saw it lasted for about 2 hours and boom, right up. It's why Bitcoin continues to go up every day, right? Bitcoin's trading 35,000. Ethereum's trading 1150. Those are huge moves in the last 8 weeks.
Mike, I want to break some news here because the Capitol buildings are going into lockdown due to the protests, and Pence has been escorted out of the building. So, that draws into question here, big time, all of these uncertainties around the Biden inauguration. What kind of risks does that create?
Listen, this is really disappointing. We had a president who just can't accept defeat, right? He has this grandiosity, this delusions of him being, unflappable. And 56 court cases, he lost the election, and he continues to stir the pot and to evoke the passions of his base. It's undemocratic, it's ugly, and what you're seeing in D.C. solely, rests on the shoulders of, President Trump and the people that have supported and enabled him. You're seeing now Mitch McConnell back away and Pence back away. But when he was doing good for them, they were his enablers. And I don't think we should forget that.
We also have another headline crossing that the House is going into recess. A lot of these uncertainties have drawn people into gold. Your clients are also off the hook, I hear, because of some of these uncertainties. Mike, where does gold go from here? Where does it end the year as people have these inflation expectations and other uncertainties in this market?
Listen, I think both gold and Bitcoin are going a lot higher. Gold could easily go up 30% this year. When markets start breaking to new highs and there's these manias, it's very hard to pick a top, right? Like I originally thought Bitcoin will go to 50 or 60,000 this year because that's 10% of gold. But all of a sudden things are happening so fast, it could easily be 20% of gold. And I think gold is going higher. And so we are certainly in an acceleration of the worry about debasing of fiat currencies. When I say debasing of fiat currencies, it's central banks printing money. Think about what I said, 75% of all the dollars in circulation were printed in the last 10 years. That's an incredible statistic. It broadly means that, you have 4 times as many dollars as we did 10 years ago. Right, that's driving asset prices. And so this has hit this acceleration point.
So you see Bitcoin then at more like 60,000. How soon does it get to 100,000?
It could get there this year if we continue to see this kind of momentum. The unique thing about Bitcoin, so in most assets, most commodities, if price goes up, there's a supply response, right? If the price of oil goes up, we start drilling for oil all over the world. Even in gold, which has got a limited supply, if price goes up, we spend more money on mining. There is no more Bitcoin. There are only 21 million Bitcoin that will ever exist. And so as price goes up, there's no supply to come. And so we have this giant supply-demand imbalance where now institutions say, damn it, I can't believe I don't have Bitcoin yet. Insurance companies are buying it. Asset managers are buying it. High net worth people are buying it. And there's not a lot of supply.